Now, Rodman & Renshaw has recently announced the launch of its new automatic trading platform, Direct Markets. Can you tell me a little bit about it?
The whole idea is that Rodman already does this follow-on offerings for existing public companies. It's done the same way it's always been done. These guys realized a couple of years ago that at some point some technology innovation is going to come along to make a more seamless solution to provide the same services, and that's what Direct Markets is meant to provide. Direct Markets is going to launch in March, and we will be up and running at that point.
And now, what does this mean for your big competitors like JP Morgan, Goldman Sachs, all those big name investment banks?
Well, I think that they're going to have one of those moments where their jaw drops a little bit and they're going to think, why did we not do that? I think this is a hard industry to break into from the outside. Having Rodman there and doing this business and creating this disruptive technology innovation, I think is going to make these guys probably pause and think about what they could be doing differently.
Now, by reducing the fees to the companies, do you see growth in pipe financing and other types of financing that you guys do?
This type of follow-on, all the various types of follow-on capital raising activities happens organically, whether we do this or not. What this allows is the issuers who are raising capital to keep more of that capital and not give out as much money to investment banking fees, instead pay a tremendous discount by paying just pure trading costs.
Now this seems like it'd be great for companies, maybe in the biotech, the technology industries, the pharmaceutical industries, that might need to raise money very rapidly. It seems like a great platform for them. But what about the other companies? Are you concerned about companies using this kind of as a quick fix and in turn diluting shareholder equity? Or what does this mean for the average investor?
Well, again, we see existing public companies raising capital for any number of reasons from time to time. We see 2 or 3 new shelf offerings per day. At any point in time, there's 1,500 open shelves. So companies are raising capital for various reasons: expansion, growth. What we're providing is an ability to keep more of that capital that they're raising and be more opportunistic as to when they raise the capital, really empowering the issuers to be more in control of their destiny.
And what does this mean for the institutional investors?
For the institutional investors, for the first time, they are able to participate in primary offerings from these issuers directly. So they have a direct electronic communication with the issuers, and they're able to realize when they're open shelves, and they're able to bid directly into those issuers, again, circumventing the traditional investment banks that have been there.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to